21 million. 21 million, 21 million. Okay, so I made a mistake the last class. Sorry for my manners. Hey guys, how are you doing? So I made a mistake in the last class that Bitcoin was 12 million. I kept on saying it. The problem is that I was distracted. I would not even lie to you. I was totally distracted in the last class. I was trying to do a couple of things, getting ready for a couple of meetings, and also doing some math in my head. But I just knew I had to get that video done that day, so I flopped. I made a mistake. Human beings, right? Okay, so Bitcoin is not 12 million. It's 21 million with some additions or subtractions here and there. So I'm really sorry for the mistake. I hope you guys forgive me. It's coming from my from my heart, trust me. Alright, so Bitcoin is actually 21 million. There are 21 million Bitcoins. Total supply, not 12 million. I put the numbers, I put one before the other, and mix the whole thing up. So today we'll be talking about market analysis, right? Market analysis. We're talking about market analysis. I said that we don't just invest in any crypto coin, because there are a whole lot of coins out there, over 10,000 coins that have been listed, and the ones that have not been listed, trust me, there are more than that. So there are like 10,000 plus coins out there, and not all of them are good. That is the truth. Not every coin out there is good. It's just like business. I'm a businessman, so I usually like relating this to business, and I also feel that relating it to business, something we know is going to help our understanding. So just like not every business works out, that's just the same way not every crypto project work out. Some of them get rug pulled, some of them get rug pulled, some don't get rug pulled, but they just don't ever go up. Some are very slow. So we don't want our money in a dead never to rise project, or a really slow project that pumps and dumps, except we want to use it to scalp, to get quick profits. But then I don't feel it is a good approach to crypto project. Crypto project is supposed to be, like you treat a normal business. As an investor, you're supposed to get your money into a business that you feel over time is going to yield good income and can actually compete in that market. If you do not feel the business can compete, even if they're in a hot market, then I don't see any reason why you should put your money into it. Because it's one thing to be in a hot market, it's another thing to be able to really compete and know what you're doing in that hot market. Being in a hot market doesn't mean that you are going to make profits. It doesn't mean you're going to make profits. Right now, crypto is a hot market, but it doesn't mean everybody is going to make profits. In fact, a lot of people are going to lose their money. That's why we usually say, do your own research or invest what you can afford to lose. You get, because in as much as we try our best to give precise signals, we still know with our expertise that that cock. So we still know with our expertise that things can still go south. We do not own the market. If we were the market, we will all make. Can somebody shut up that cock? I really, really, really want to make a video here. Okay, so back to what I was saying. We know that we do not own the market, right? So anything can happen, but we try as much as possible to obey some certain rules, laws, that the market has provided us to be able to, get much of the markets, to understand the market and respond to what the market gives us. You understand? So if you try to predict the market, you are going to fail. You're going to fail. Same thing with the forex market. But then if you try to predict the market, maybe you feel your intuition can be correct, but you feel that it is going to rise or it's going to fall, and then you trade the market based on your feeling, right? You trade the market based on your feeling, you are most likely going to fail. But if you put some things in place, all this analysis, if you put them in place, then I think I should close the window. Excuse me a bit. So if you put these things in place, then you are most likely going to succeed. Okay, that's that. So if you put all these things in place, you are most likely going to succeed. That is it. But we are not guaranteed 100%. No crypto expert out there, no crypto trader out there will tell you that this thing is 100% going to happen. Even me, did I tell you that this signal is 100%? Stop listening to me, because we can give you a 95%, a 99%, but that little 1% can make a whole lot of difference in our analysis. Okay, so nobody has 100% view of the market. Just like what happened, a lot of people were in the bull season. That is this 2021, when the bull season, and nobody expected the market to crash the way it did. There's no crypto expert in 2021 that will tell you that he or she expected the market to crash the way it did. We all were aiming at Bitcoin hitting 70 or 80k before it, ushers it us into the bear season. But it did not happen that way, and the whole thing came crashing down. The only time you see crypto experts came out and started predicting that it's going to fall more is when it has already started falling, not before. You get? It's when it has already started falling, not before it started falling. So some things take us by surprise. Nobody, and I repeat, nobody predicted that it would happen that way. Yeah, but we are coming up little by little. By August, we'll enter the bull season again. We'll enter the bull season again. And then after that, the bull season, this one is going to be really, really short and fast, yes. Anyway, that's not what we're here to discuss. So, market analysis. We carry out analysis before we invest in a crypto project or even trade a crypto coin. That we're investing in a crypto project, investing in a crypto coin, or we are trading. We have to carry out analysis first. We don't just jump into the market with our money and say, where's the market? Oh, there you are. Please take my money. Yeah, just have my money, have my money. Anything that comes out of it, fine. If nothing comes out of it, fine. No, we don't do that. We are in the markets to make money, right? So we have to do our due diligence to make sure that we get into the market and get out with money, profits. Yeah, that's what we have to do. We have to make sure that we're getting into the market and getting out with profits. We are not just getting into the market because every other person is getting into the market. So, types of analysis. We have some types of analysis, about 3. We have the fundamental analysis, the sentimental analysis. This guy here, sentimental analysis, I really, really, really always say that the guy is just trying to support fundamental analysis. He shouldn't stand alone, in my opinion. I think they should just incorporate this guy in fundamental analysis. A lot of people have actually, but I just decided to bring it here because I'm stubborn. And then technical analysis. So basically the majors are fundamental and technical. But you can also add sentimental analysis if you're looking for a way to differentiate some things, or maybe you just want your brain to be full. You want to sound like some huge expert, like I'm trying to sound like now. I'm an expert here. So you want to sound like some expert, so you're like, oh, sentimental analysis. So we have 3 types. Other people will be like, there are just 2 types of analysis. No, there are 3. And you're like, oh, there's fundamental and technical. You're like, oh, no. There's also sentimental analysis. You get sentimental analysis actually fits into fundamental analysis, but then who cares? We want to make the name. All right, so fundamental analysis. What is fundamental analysis? Meanwhile, this is an introduction course. I am not teaching this analysis per se yet. There will be other videos that are going to explain everything as it is. There will be a fundamental analysis series. That thing has to be a series because this guy is broad, just like technical analysis is broad. So let's dive right in. So this analysis in particular is based on the belief that information and some natural happenings move the market, which means, I don't know if you guys remember when, let's forget about that. So some information and some natural happenings move the market. So China says no Bitcoin. They ban Bitcoin and they have a large population. Whenever China speaks, it's like the whole of Asia speaks, right? So they say that and people start shorting Bitcoin. In case you don't know what shorting means, shorting is they start selling Bitcoin, right? Start selling Bitcoin. So people start shorting Bitcoin, okay? And that drives the price of Bitcoin down. So if you got wind of the news, immediately the news came out, or you somehow, I don't know if it's magic or connections, you got wind that this is what they are going to see on the news today before the news came out. You use that information because you understand that when this information goes out and becomes the trend, a lot of people are going to short Bitcoin, right? You get it. So you take your money out of the market before that happens, or you join them to short Bitcoin, right? You join them to short Bitcoin. You'll be shorting Bitcoin in profits, let me put it that way, at a price that has not yet been affected by the effect of the news. So what shorting does to any coin is it, especially shorting in large quantity, shorting in large quantity, you get. So what it does when a lot of people are shorting a particular coin is that the price of the coin drops. You understand? The price of the coin drops. So if you have that information, or maybe some natural happenings, let's say earthquake, I don't know, right? I should be. So some natural happenings, you get wind of all this information or news that before that you feel are related to the market. We believe that this natural happenings, they move the market either for or against us. So we carry out this analysis because it is expected that some of this information will affect market prices. It most likely will. It will affect the market prices, but it has not yet reflected on the prices. It has not yet reflected on the prices. Just like I told you about, I used the Chinese government as an example, or the China Republic as an example. So they say they ban crypto, right? If they ban cryptocurrency, then you short Bitcoin. You know about that, or maybe as the news is coming out, you are getting wind of it, so you short it. It has not reflected. Usually it takes like 24 hours, and then you see the massive rush. massive, though crypto now is because of social media and all, it could take shorter time, but then the massive rush usually comes after 24 hours. That's when you see a lot of people going into the market with the same motive, to short that coin or to long it, depending on what the news is about. Is it favoring the coin? Is it favoring the market, or it is not? So depending on what is being said will depend on the reaction of these guys, these traders, like me, like you. It depends on our actions. What actions are we going to take from this piece of information or this news that we hear? So basically, we use fundamental analysis in order to take advantage of the market by leveraging on news. So some people that do not really listen to news, they don't check crypto news and all that, they just in the market, they'll just wake up one morning and see that, oh damn, price has dropped. How? Why? When they start asking around, then they get to know that, oh, it is so and so news that came out and these days and that made the price drop. Or maybe they are shorting the coin and then maybe they're shorting the coin and then they see that the price moved really high and they're like, how on earth did this happen? Like, then they say, oh, it's so and so news that came out that made the price surge to that level. All right, so basically that's what we use fundamental analysis, and there are a whole lot of other factors that are grouped into quantitative and qualitative factors which guide and facilitate our trading and investment decisions. I'll talk more about quantitative and qualitative factors when I'm actually making the fundamental analysis video. So there's the leveraging on news and the other factors that are grouped into quantitative and qualitative factors which guide and facilitate our trading and investment decisions. So we use fundamental analysis for investing and trading. The thing is, it would be really tasking to actually get access to the news and to other information we need for our fundamental analysis. That is why we have applications like the last video, CoinMarketCap. We use CoinMarketCap, we use CoinGecko, a whole lot of other apps, Bitcoin Journal, Bitcoin.org, So that's why we have applications, we have websites that are dedicated, even communities, Telegram groups and channels that we're just there to share information. We're just there to share information with each other so nobody gets left out. So we have applications, we have websites that, I can call on groups, WhatsApp groups, Telegram channels or Telegram groups, Facebook groups, social media in general. Then we have all these things that are dedicated to giving us access to this information. So let's say you want to know what people are saying about Bitcoin, you could just go on Twitter, write Bitcoin, and then you see what people have said about Bitcoin that day. You understand? You can just see all this audio, maybe you check Telegram channel, there's some Telegram channels that just talk about Bitcoin, and you see all these Telegram channels, you join and you check what they're saying on the channel that day, or WhatsApp, if it's a WhatsApp group, whatever is your Facebook group, So you just check all these things and then you see, you get access to this information, and it's actually good because we cannot watch every news, every documentary, or keep tabs on every project. So I might be watching Bitcoin news, another person could be watching Ethereum news, another person will be watching Ripple, another person Cardano, blah blah blah, like that, Doge, and the rest of them. So after watching our news or following these projects, getting our findings for the day, we could come and post on the group and say, oh, this is what so person say, or probably even give them embed links in our post that will lead to the news that we read, maybe from a website or something, and then people would go click the link and go there and read for themselves to know what really is going on with this particular crypto project, because we are one person, we cannot actually keep tabs with every project. So That is just it. So old and new projects alike, we can keep tabs by using applications, websites, groups, communities that are dedicated to giving us access to information on whether new projects or old projects, how they are faring, what they plan to do next, blah, 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 blah. All right, so the next one is sentimental analysis. Yeah, so what exactly is sentimental analysis? In my opinion, this analysis, like I said from the beginning, this analysis is an auxiliary or supporting analysis to the fundamental analysis. I told you guys that, in my opinion, the guy should just be in fundamental analysis, you guess, but because some people remove it and then they sound like some really cool experts, so I decided to do it too, because I'm a cool expert, all right? So, yeah, drum rolls. So, fundamental analysis. You can put sentimental analysis into fundamental analysis. Yeah, because sentimental analysis cannot actually stand alone, but I put him alone here because I want this video to be long. I'm kidding you. All right, so it's a supporting analysis to fundamental analysis. So even though we use it every now and then, you cannot trust sentimental analysis wholly. So what exactly do we do in sentimental analysis? What we do is that we try to read the minds of other traders in order to know what new projects they are investing in, what are their hopes and expectations concerning a particular crypto project. So we can know new projects through sentimental analysis. We can also know what people think about an existing project and the market in general. So if people feel we're in a bearish season, bearish season is a season where coins depreciate in prices. So if people feel we're in a bearish season, a whole lot of people feel we're in a bearish season. Or do a whole lot of people rather feel we're in a bearish season, or do a whole lot of people feel we are in a bullish season? What exactly are they saying? What exactly are they saying about Doge? Are a whole lot of people trying to short Doge, or a whole lot of people trying to, long it or buy? Yeah. So what exactly do they think? Do they think it's going to crash? Do they think they are going to? What exactly do people think about this existing crypto project, and what new crypto project is available? What new crypto project is the talk of the town, or talk of the net, or talk of the market that everybody's talking about, and then there are high expectations for that project or low expectations, whichever. So what exactly? And the major way we actually get information, all this information, and analyze sentimentally is through the use of social media. I mentioned social media, I think, when I was talking about fundamental analysis. You see what I said? Sentimental analysis cannot stand alone. So we analyze it through the use of social media to know what the hot cake is. And this also helps because, price and demand, or is it demand and supply? I suck at economics. Okay, so demand and supply, right? So demand moves price, especially when the supply is limited. So that's part of the reason why Bitcoin is actually this expensive, because Bitcoin is just 21 million. First of all, it's the mother of crypto. We should give it that credit first. Bitcoin is crypto. So it is the mother of crypto. So you cannot know about crypto without knowing about Bitcoin. And they're just 21 million. How many billion are we in this world? And everybody wants to get a piece of Bitcoin. So it drives the price it drives the price really high. As it stands, Bitcoin is still underpriced. In my opinion, it's sitting about $40,000. It went as high as 60, maybe 64 or 63. But currently now, as when this video is being made, it's sitting at around $40,000. But then it's still underpriced because Bitcoin is going to hit $1 million and more. yeah, I've checked the market cycle, done a lot of analysis, not just me anyway, done a lot of analysis and arrived at a lot of statistics, and yeah, Bitcoin is going to hit $1 million and more for one. So no matter how much you're getting now, you're still early. You're still in the early adopter stage. So and yeah, so let's say we have just 4 coins. A particular, what coin is that? I think there's this coin that they're just 10. Yeah, they're just 10. The coin did crazy. The coin in a month, the coin went up higher than $10,000 in 1 month. I think it's go up faster. GUF. So a lot of people got to know, they did their marketing right. A lot of people got to know about that coin. They dropped first. They dropped little fractions here and there, and then they did their marketing right. A lot of people got to know about the coin, and they wanted to get it, get the coin. And people that got in early, thank God for them, because that coin did crazy. The coin went very high. In a month, it's surpassed $10,000. In a month, it just came out, and in a month, boom. So a lot of people know about the coin, and they want to get a part of it, and the supply is limited. Either the supply is limited, the supply is very small. That is one of the things I was teaching fundamental analysis. I think I even spoke about it in the coin market cap class. So the supply is limited, right? And a lot of people know about the coin. A lot of people want the coin. That will drive the price very high when a lot of people are trying to long it. A lot of people are trying to buy and accumulate it. So since there's not enough to go around, it ends up driving the price very, very high. So the guys are getting early will chop most of the money. Anyway, that's for that. So technical analysis. Technical analysis. So why fundamental analysis is based on news? Excuse me. Why fundamental analysis is based on news, real-time events, quantitative and qualitative factors. Technical analysis is based on historical patterns, which means technical analysis is based on history. Not exactly, not Lord Lugard, please. So technical analysis is based on historical patterns in the market. Yeah, there's no Lord Lugard in the market, or Abraham Lincoln. So the historical patterns we're talking about in the market are in the market rather. Historical patterns we're talking about are in the market. We usually employ the use of trading charts, which is why we can describe technical analysis as a type of analysis based on historical chart patterns. What that means is whatever we are trying to analyze using technical analysis is already available on the market in form of charts, and it has happened before. So we just have to go back, look at what happened when a particular setup happened. What was the result? Let's say I see a setup, and after the setup there's a massive dump on the coin, and then I check the particular setup I have right now. I'm seeing currently on my screen that is happening right now, and they are similar. Chances are that what happened before is going to happen again. You understand? Chances are what happened before is going to happen again. So when I see that setup, I would prepare for a dump. I could position myself in the market for a dump. You understand? I'll just position myself in the market for a dump, expecting that dump. Most times it happens. Sometimes it delays. It just, play around before it happens. Sometimes it does not. But the times that it does not are very, very small. Okay, so that is for that. So this analysis is based on the belief that every information we need to trade is already on the market and is reflecting in its prices. So fundamental analysis hasn't started reflecting in the prices, right? But technical analysis is telling you that it's already reflecting in the prices, whatever we need to trade. Now, I usually merge whenever I want to make an investment decision. Usually investment decision, not trading decision. If it's trading, I usually just use technical analysis. But when it comes to investments, I usually use technical and fundamental analysis to know the exact time to get in or exit a market. Yeah, I'll explain all that when I'm actually teaching all this individually. Yeah, so it's already reflecting in its prices. So all you have to do is read the charts, analyze the information thereon, and apply it to making a trade decision. That's what I said. You just have to read the charts, go back, check the history, what happened at this point and this point and this point, what happened? Is it playing out right now? If it's playing out right now, then okay. Meanwhile, you don't really have to go back to the charts every time. There are some setups that I'll teach you in technical analysis that you just know, and once you spot them, and you just know what's going to happen. You don't really need to go back and check a chart. You get, once you just spot a particular setup, a particular candle or whatever, you just know that this thing is what is going to play out. This setup that I'm seeing here, this is what is going to play out. You just know it. Okay, so what we believe is that prices and trends are patterns that will repeat themselves over and over again. Okay, I wrote again and again, right? Okay, but over and over again. I overrule my statement. And it plays out most times. Yeah, it does play out most times. Especially, except rather when the market wants to fake you out. That usually happens in Forex, but then except when the market wants to fake you out, then hit your stop. Okay, so what we believe is that prices and trends are patterns that will repeat themselves again and again, and it plays out most times. So while your fundamental analysis relies on your good judgment, your knowledge, your expertise, and your assessment in order to trade or invest, technical analysis follows patterns, trends, and employ strategies for the same trade decisions. In my opinion, none is greater than the other because, okay, they beat each other sometimes. Sometimes technical analysis will beat fundamental, sometimes fundamental will beat technical, but they usually work in cohesion. Yeah, they usually work in unity. So that is for the introduction to market analysis. In our next class, I think we'll be talking about fundamental analysis. That's if I don't feel there's something you guys should know before fundamental analysis proper. But then for now, we should expect a fundamental analysis class soonest. But if you don't get a fundamental analysis class, that means I looked through my notes, and I feel that there's something I'm not telling you. You know, I don't want to cheat you, right? I feel there's something I'm not telling you, and you need to know before it is time to, learn fundamental analysis. So, goodbye. Thank you very much for staying. Sorry, I didn't bring the burgers. This is a really, really long class. I'm supposed to come with snacks for everyone, but then thank you for staying.